All right, let's go ahead and get started, and people can just kind of join us as they can. Thank you all for joining us this morning. As you know, our strategic alliance partners have really played a major role in helping guide all of us through this pandemic. And I know I speak on behalf of everyone when I say how truly grateful we are for all of your expertise. First, I wanted to thank Kim Coggin of Frazier Dieter, who's helped organize this call. Kim is Frazier Dieter's market leader and the main contact for all of our EO members. So today we're joined by Bradley Carroll of Frazier Dieter and Adrian Sipe of First Horizon for a discussion on PPP loan forgiveness. Bradley is currently a principal in risk advisory services for Frazier Dieter. And he's their financial services practice leader and serves the Institute of Internal Auditors on their financial services advisory board. Adrian currently serves as director of government guaranteed lending for First Horizon Bank. She led their efforts in supporting the PPP loan process, which produced 14,500 loans totaling $1.9 billion in volume and positively impacted 313,000 jobs. That's a lot. They are going to help guide us through all the changes that Congress has made and help us understand the path to loan forgiveness. And we will let them talk through their slides and then kind of hold the Q&A towards the end, if you would, just so the chat box is not blowing up for them. And we will be sure and try to get through as many questions as we can. With that, I will turn it over to you guys.
Hey, Samira, will you introduce David real quick too?
Oh yeah, David Jones of First Horizon. I feel like everybody should know David. He's been around for quite some time, but he is a just wonderful, wonderful guy and a great resource. So I encourage all of you all to reach out to him as well.
All right, well, I will go ahead and get the deck started, and then Bradley and Adrian will take it from there.
Well, good morning. I'd like to thank the group for letting us be here and present in this environment. It's been interesting. Before we get into the forgiveness portion of PPP, I'd like to step back and talk about PPP by the numbers. First of all, the PPP program, it was rolled out really quickly, and that caused some hiccups, but this program has largely been a success. And if you think about what the program was designed for, it was designed to keep people on payroll and off the unemployment rolls, and it has done that. So if you're judging it by that overarching goal, it has been a very successful program. There have been over 4.5 million businesses that have received funds through this program. That's huge. I mean, 4.5 million businesses. There's been over $550 billion dispersed through the program. So there's, I mean, just tremendous amount of impact. There's still money left. So we still have about $100 billion left in guaranteed funds from the SBA under the PPP. So while most of the money obviously has already been lent, there's still opportunities for small businesses to participate in this program. The banks that I've talked to have told me that most of the big loans, as they call it, have already been funded. And what they're seeing now with the money that's left are the much smaller loans. So they're seeing more sole proprietors, more partnerships, more S corps, smaller businesses that are now applying. And so the $100 million doesn't seem like a lot, but they're talking about at the rate at which it's being dispersed at this point. They believe it's going to continue to be out there until the end of the program. So if you haven't applied yet, if you're thinking about it, there's still an opportunity. Get with your SBA lender. Still money, still time.
All right, so good morning, everybody. My name's Adrian Sipe. I'm excited to be here today with David Jones from First Horizon as well. And we're going to go over some of our numbers too. Some of these were mentioned at the top, but we have actually done almost 15,000 loans at this point, close to $2 billion and assisted over 300,000 employees. We actually have over 1,000 bankers that have been working on this program so that we could reach as many of our customers as possible. And we opened up our doors probably midway through to help non-customers as well. And we are continuing to lend until the origination deadline of June 30th. So June 30th is the last day to receive an SBA loan number and have funds allocated towards your loan. So if, like Bradley said, if you have not applied yet and you need the funds, then you definitely want to start that process right away. The original PPP Act was passed by Congress, included information about forgiveness. SBA and Treasury issued an interim final rule, or what they call an IFR, with their interpretation of the act at that time. Since then, SBA and Treasury have issued SBA Form 3508 as the PPP forgiveness application with specific instructions on calculations as well as an interim final rule for forgiveness and on how we're supposed to process these applications when we get it. Then they, of course, made another change. We've had lots of changes through this process. On June 5th, Congress passed the PPP Forgiveness Flexibility Act, which modified the forgiveness requirements from the original act. We got 2 new IFRs since then, and just yesterday they released a new application as well as an easy app for certain borrowers. And if you go to treasury.gov, there's a red banner at the top. You click on that, it has all of the documents you would need, but it also includes the most recent forgiveness applications that were released yesterday. So the presentation we're going through today does include these most recent updates, but it's just important to know as through this whole program, things change. Even though we just got these 2 IFRs and an application, I know that there are certain industry groups that are pushing for different changes to those. So it's just important to know that this is information as of today. It can change, and the best thing that you can do is check treasury.gov on a regular basis for any updates to the process. And of course, talk to your banker. They should have the most recent information as well.
Yeah, Adrian, I think that's an important point. Anything we talk about with PPP is as of current guidance right now, because the guidance is changing so quickly and without notice. So yeah, and I wanted to go back to something you said, 1,000 bankers on this program. When was the last time that you saw 1,000 bankers flock to a program in just a few weeks time?
Yeah, and Bradley, we normally in our bank process probably around 12,000 loan closings a year. We did over or almost 15,000 in 2.5 months, not even 2.5 months. So there was no way for us to facilitate that many applications without bringing a lot of people. David was one of them. He was definitely in the trenches and had his sleeves up and doing the dirty work. And it had to be all hands on deck to be able to facilitate a project of that size and to be able to be responsive to our customers and make sure they knew exactly where their loan was at all times.
Yeah, and that's just amazing. And that's what people don't understand. It is how hard the banks have worked, the long hours that they put in to get these loans processed, get them processed timely, that how integral your local banker was in this process. I mean, I've talked to many bankers. I know the hours that they put in. They were round the clock processing applications, working over weekends, getting SBA loan numbers for their applicants. I mean, you guys put in a lot of hard work. I mean, 313,000 jobs affected. That's pretty amazing.
Yeah.
So yeah, Frazier Dieter, we have been hard at work as well. When this first was announced, and we started talking about this in late March, early April. Again, being a former banker, I reached out to my banker contacts and asked them, tell me what you think about this. And one of the things that the bankers told us is, look, it's really a one-page application. It's a pretty simple number. Most people can figure out what their average monthly payroll is. Most people can multiply that by 2.5. So there's not a lot of space for CPAs and becoming agents to help an applicant do this. we've got this, the payroll companies have this. So Frazier and Dieter, we kind of stayed out of the application process for PPP. And at that point in early April, we started looking at today. What is forgiveness going to look like? And again, because of my banking experience, I thought, gosh, this is going to be a loan covenant test. At the end of this, there's going to be a loan review of this portfolio, and it's going to be on every single loan. And that's going to be really hectic for the banks as well. It's just going to be another rush. So what we did was we started consulting with our clients and other borrowers who have become clients about what is in the guidance. And then we've talked to a few banks and are helping them design their forgiveness application online process. So we're just part of their task force and vetting what they're building. We also developed a modeling process in-house so that we can help borrowers plan for forgiveness. And this has been really critical because that's what the borrowers have really been concerned about to this point is how do I maximize my forgiveness? We have gotten certain information from the borrowers, put it into our model, and we can run different scenarios, multiple scenarios at once that show them down to a detailed level. Well, if I bring this individual back on this particular date at this rate, how does that affect my forgiveness amount? So we've updated the model with updates in the guidance and are rerunning models for clients. And then the last component that we're offering is an attestation service. So basically it's an audit of your loan forgiveness application. And if you've ever had a financial statement audit, auditors come in, they take your financial statements, they pick out a number and say, prove this number to me, show me the documentation. And they flip through the documentation until they get a comfort level that this number is materially correct. That is the highest level of attestation services that a CPA firm can provide. And that's what we're doing as well. So this is where we have stepped in and helped our clients and our role in the PPP.
All right. So how long do you have to use your PPP funds? Well, the PPP rules originally stated the borrowers had to spend their funds within 8 weeks of receiving their money. The IFR that we got on forgiveness and the new forgiveness application allowed for, or the original forgiveness application allowed for an alternative payroll period for those whose payroll did not align perfectly with the date that they received their loan funds. So SBA realized that just because we say it starts on the day that that you get your money doesn't mean that that works with your payroll period. So they allowed some flexibility there. So it was, you could do it 8 weeks from the first day payroll period began after receiving your loan funds. It also clarified the time frame for cost incurred and cost paid during that 8-week time frame. However, the Forgiveness Flexibility Act has expanded that 8-week period to 24 weeks or until December 31st, 2020, whichever comes first. So any loans before June 5th, you get to choose if you want an 8-week window or a 24-week window to spend your money. Any loans approved June 5th or later is automatically 24 weeks.
And Adrian, I'd like to say something about that alternate payroll period, that if you're only 8 weeks and you want to use the alternate payroll covered period with the 8 weeks, you're really going to be keeping up with 2 different 8-week periods because the alternate is just for payroll. So if you do select that, your non-payroll cost, you're still on the clock the date your loan was funded. So if your first payroll was a week later after your loan was funded, you're keeping up a 2 8-week period. So just if you happen to be in that scenario and you select that covered period, just know you've got 2 different 8-week periods, and most people don't realize that. So just pay close attention if that's what you select.
Can you guys address whether it's 8 weeks or 24 weeks or any duration in between? That was one of the questions, and I think that's what a lot of people are confused about.
Yeah. So if you look at the guidance says you have an 8-week period or you have a 24-week period. They're not bookends that you can choose anytime in between. You choose one or the other. You choose to do this over 8 weeks or you choose to do this over 24 weeks.
All right, so how can you use your PPP funds? The Forgiveness Flexibility Act also changed the percentage of loan funds that needs to be used for payroll in order to be forgiven. It was originally 75%, now it's 60% because they want to make it easier for the funds that you receive to be eligible for forgiveness. So if you spend less than 60% on payroll, that portion is not eligible for forgiveness. For example, if your loan was for $100,000 and you spent $50,000 on payroll instead of $60,000, which would have been 60%, and $50,000 on eligible non-payroll expenses, you would divide the $50,000 that you spent on payroll by 60% to determine the amount that would be forgiven, which in this example would be $83,333. If you had spent the full $60,000 on payroll and divided that number by 60%, the entire $100,000 would have been forgiven.
And Adrian, this was just an incredibly favorable ruling that came out in the PPPFA. If you go back and read the original CARES Act and PPP, it didn't mention any amount towards payroll. That was something that the administrator issued in guidance. And so Congress has come back and basically said, that really wasn't our intent, was to have a bar that high. So we're actually going to put this in law now. And so it is actually law instead of guidance that it's 60% towards payroll. So that, I mean, Congress, as they make decisions, as we move through this, it becomes just incredibly and more favorable to the borrowers, which is great news.
Yep, I agree. So these are all the different things that could be included in payroll, and I'm sure all of you are very familiar with these because you had to go through this determination to do your original application. However, you should be familiar with what is included in payroll from that has changed along the way. So, or clarified, I should say. So an IFR came out saying that bonuses, hazard pay, and pay to furloughed employees could also be included. That was not originally stated, and we had a lot of questions about that as we went through the process as to whether or not that could be included. And it's hard to give guidance until we have something black and white from SBA, and they did offer that clarification. There was also a clarification issued in question 16 of the FAQs. So if you have not reviewed the FAQs, that's another important document that they issued a lot of guidance on the program. And question number 16 clarified that taxes withheld from an employee's paycheck was eligible to be included in your payroll cost, but the portion that the employer is responsible for was not eligible. So those are just some important things to point out. And of course, it's also important to remember that one individual cannot exceed more than $100,000 in salaries and wages for the purpose of forgiveness calculations. However, since the covered period has gone from 8 weeks to 24 weeks, you may be able to pay them more with your PPP loan funds. That gets a little complicated, so we have an example to go over with you. But before we go to the next slide, Bradley, did you want to add anything to our what's included in payroll cost?
Just that, to restate what you said, it's still maximum of $100,000 of annual compensation over the selected covered period. So if you pay wages plus bonuses, that is still subject to that $100,000 cap. So you can't
Right.
you can't pay wages and then bonuses on top of that. So what you can put on top of that is you can take all the payroll cost, which basically is what's subject to FICA. And on top of that is where you can add your benefits. So you can take your wages plus your group health care plus your employer funded retirement, and then the state and local taxes, which is basically your SUTA taxes that you pay. So that's your basic formula for this 60% floor that you're trying to achieve.
Yeah. So let's go through an example to see how, because this gets a little complicated. We had a lot of questions about this. It was confusing when SBA came out and said the way you calculate your loan is to take 2.5 times average monthly payroll, which obviously is 2.5 months worth of payroll, but you only have 8 weeks or 2 months to spend it. The reason they did that is to allow for that extra to be spent on non-payroll cost, but it caused a lot of confusion as to what you calculate is not necessarily what you get to spend. But this expansion to the 24-week period can change that for you. So this example applies to the $100,000 cap, but it lets you see the impacts of it even if the cap isn't $100,000. So when you got your original or calculated your original payroll cost, you took your average monthly payroll times 2.5 to determine the loan amount that you had to spend over that 8 weeks. So if you have an employee that normally earns $100,000 a year and you cap their earnings at $19.23 a week, that means that if you pay $19.23 a week, you're not going to go over $100,000 per year for that employee. When you take that monthly amount to determine the average monthly salary, and then you multiply that by 2.5, it's $20,833. So that is what you could apply for. But you could only spend that over 8 weeks at that time, which totals $15,835. So now that you have 24 weeks to pay them, you could pay them up to $46,152, which is the 1923 times the 24 weeks. However, you're still limited to the amount that you were allowed to apply for. So just because you said that you were going to spend your money a certain way when you applied, you can spend it differently, especially now that rules have changed, as long as it still follows, your 60% on payroll, your 100,000 cap. You can shift those things around. So the main thing to remember in all of this is not to pay anybody more than $1,923 per week with your PPP loan funds. Obviously, you can pay other people out of other sources, but for forgiveness calculation purposes, you just want to remember to limit it at that so that you don't mess up your calculations.
Yeah, and this again, it was incredibly favorable to borrowers. So this is as the rules come out, they're making this easier and easier to obtain forgiveness. The 24-week period obviously is incredible if you need that. The 24-week period, though, every individual borrower needs to look at that and how it affects their business overall, not just from a PPP perspective, because some businesses, this will require them to have debt on their balance sheet as of 12/31, and that may trigger other debt loan covenants. There could be other ramifications. So it's something that you need to really analyze from a big picture perspective, as well as how does this allow me to spend PPP funds. Like I said, the backstop is still the maximum amount of your loan, but it's lowering the bar from 75 to 60% for payroll, and then extending the runway from 8 to 24 weeks is going to allow a lot more people to get forgiveness, especially small businesses who don't necessarily have 25 or 40% of non-payroll cost. A lot of small businesses are very lean on their lease and interest expenses or utility expenses. Many that I've talked to are run out of homes, so they don't have those expenses, but now they get a chance to spend much more of it towards payroll, and they've got a longer runway to do that. So again, incredibly favorable. Really look at that, analyze your 8-week maximum amount, your 24 maximum amount, and your total loan amount, and pick the period that's going to work best for your business.
So we did have a question along those lines, if you don't mind me just throwing it in here while we're on this subject. Someone asked, if I choose 24 weeks but run out of PPP money in 10 weeks, is there a penalty or rules that they need to be aware of?
If you run out of PPP funds, then there's no penalty for running out before 24 weeks. You just cannot apply for forgiveness until the end of that 24 weeks. So if you're in week 10, then you've got 14 weeks to sit there before you can apply. If you choose to reduce headcount because you have no more PPP funds and your business has not picked back up, then there can be a headcount reduction penalty in your forgiveness amount. So if there's a couple of penalties. If you don't hit the 60%, as Adrian showed you earlier with her example of $100,000, if you don't hit the 60% in her example, you're only going to get $83,000 of that forgiven. So that's the first penalty. If you have a headcount reduction during the covered period and you can't hit the safe harbor provision, or one of the other provisions does not apply to you, then there will be another reduction in your forgiveness. And if you drop someone's salary below 25%, drop it 25% or more, I should say, then that's another reduction in your forgiveness. So it really depends on the situation. Running out of PPP funds is not the issue. It's how that affects your headcount and your salaries afterwards.
Okay, and one last question, and then we'll hold the questions till y'all get to the end. How do the new rulings affect the required FTEs? I can use 60%, but I still need the same FTEs, right?
Yes, and as I think I just covered that, is that yes, you still have a headcount penalty. There's still a headcount requirement. There's still the safe harbor. The safe harbor's moved from 6:30 to 12:31. But yes, you still have to watch your headcounts.
And you still have to have the same employees. You can't switch employees.
No, you absolutely can switch employees.
Okay.
So let me get into some of the details then. So since we're here and talking about this, so the headcount, if you terminate someone for cause, for performance issues, that headcount will not count against you in calculating reduction. If someone leaves voluntarily, that headcount will not count against you. If you make a written offer to return to work to a furloughed employee for the same hours and same wage that they had before they were furloughed, and they refuse to come back to work, as long as you notify the state unemployment office, that will be a deemed restored headcount. So that was all part of PPP. And the PPP Flexibility Act, the PPPFA, added two more. They kept those and then added two more. So they said that if you furloughed someone who was a specialist, they had special skills or special training, and you were unable to hire them back, and you could not find someone who was similarly qualified, then that headcount reduction will not count against you. And then the big sweeping one, and this is incredibly favorable to certain industries, is that if your business operations cannot be restored to pre-pandemic levels, which they are defining as of 2/15. So if you can't get your business operations back to where they were as of 2/15 because of governmental orders or guidance, then your headcount reduction can be forgiven. So if you've got your business back to 80% of what it was as of early February, and your headcount is back to 80% of what it was, and you can document that 20% drop in business and the corresponding headcount drop is related to a governmental order or guidance, then you can potentially have all of that headcount reduction forgiven and maximize your loan forgiveness.
Got it. Thank you very much.
All right, so how can we use the other 40% of the proceeds? Mortgage interest, rent, and utilities are eligible for forgiveness if it was paid or incurred during the covered period and paid on or before the next billing date, even if the billing date is after the covered period. So it is important to note that advance payments of interest on a covered mortgage obligation are not eligible for loan forgiveness, and that principal payments are not eligible for forgiveness under any circumstances. So we actually had a lot of customers that contacted us wanting to, because they had deferred their loan payment on their regular loan, and once they got PPP, they said, I want to take my loan off deferral and make payments with PPP. So we had to do a lot of one-on-one education of, you cannot make a principal payment with these loan funds. So that's really important to remember. And on our next slide, we have an example of being able to pay bills during the covered period and on after it if it was incurred during the covered period. So in this example, if the covered period begins on June 1st and ends on July 26th, and you pay your May and June electricity bill during the covered period and pay your July electricity bill on August 10th, which is the next regular billing date, you can seek loan forgiveness for your May and June electricity bills because they were paid during the covered period. You can also seek forgiveness for the portion of your July electricity bill through July 26, which was the end of your covered period, because it was incurred during the covered period and paid on the next billing date. So, I think this comes in more to play if you're keeping your 8-week example and maybe less so in that 24-week window, but it's still important to understand the difference in paid and incurred can both apply during the covered period.
Yeah, Adrian. So the accountants in the room, this is an interesting phenomenon for us because typically you keep your books on a cash or an accrual basis. And what we're doing here is we're keeping it on both. So those that are incurred, that's accrued, and those that are paid, I mean, that's obviously the cash basis. So we were actually talking with a client earlier today who got their loan on April 15th, and their first payroll was on April 15th. So that was paid during their covered period. So they got to include a 2-week payroll that really was incurred before but paid during. So it's given them, it's going to give them, they're staying with the 8-week period, but it's going to give them close to 10 weeks of payroll within that period, which really helps them get to the maximized forgiveness. Kim, if we could go back one slide, there's a couple of things I wanted to point out here. So if you look at mortgage and renter lease, the devil's in the details. And what I want to point out here that most people are not thinking about when we're talking to them is this: if you see both of those say for real or personal property. So when most people are thinking about interest or rent, they're thinking about their office or their warehouse. That's real property. But we're also talking about personal property. So if you have office equipment that is leased or rented, if you have a business automobile that is leased or financed, then that's personal property. And so since the guidance shows that this is for real or personal property, that don't sell yourself short when you're figuring out your loan forgiveness amounts, because that will help you get to that 40% ceiling on these non-payroll costs.
We did have one more question along those lines. If you choose the 8 weeks, the safe harbor is June 30th, correct? It's only 12/31 if you choose the 24 weeks. Also, if the government is only allowing me to operate at 50% during my 8 weeks, does that mean that I only need to bring my FTEs to 50% to be forgiven?
No, that's not what it means. If you're only operating at 50%, you have to document that there was an impact, and it's not operating at 50%. It's business operations before pre-pandemic levels. So I know that's a fine hair to split, but I want to make sure it's understood that it has to be compared to pre-pandemic levels. It has to be documented that the reason for the decline is because of a governmental order, and then there's a potential. It's not 100% forgiven in every case, but there's the potential that yes, that payroll reduction penalty could be eliminated. It doesn't guarantee full forgiveness. What it does is it allows you to eliminate the penalty.
Yeah, and I think just to add to that, it's important to understand the intent behind all of this. Obviously, we had a lot of businesses that were shut down completely that got PPP, and we got a lot of questions of, okay, I'm shut down. I don't have anybody working. What do I do? You can pay people that are not working. Obviously, that's a business decision up to you. But if you want the loan, forgiveness and on the loan, and that's how you have to make that work, it is okay to pay people based on what they would have worked or their expected hours, because the intent behind this program was to keep people on payroll and not have people lose their jobs and go on unemployment. All right, so we are going to, let's see, the forgiveness. Oh, how can when can you apply for forgiveness? I'm sorry, I was looking at the wrong thing. So the Forgiveness Flexibility Act changed the deferment period of the loan from 6 months until the date of the forgiveness amount is determined and technically paid by SBA to your lender. So you don't have to, originally after 6 months, you were gonna have to start making payments even if your loan forgiveness hadn't been determined yet. So now that they've extended that the forgiveness period, they've also extended that deferment so that you don't, if your loan ends up being forgiven, you never have to make a payment. If in 9 months the determination is that you have a $5,000 balance, then you will start making payments at that point. So even though you could apply for forgiveness 8 weeks after you've received your loan, you're going to want to wait till you spent all of your money, have the documentation that you've spent it. You now have 10 months to apply for forgiveness after the covered period ends, either the 8-week or 24-week. So it gives you a lot longer to pull all that information together and be able to apply. And you do not have to make a payment until you've applied and that determination is made and it is determined that there is a balance remaining. So that was a very beneficial change to customers and to banks in reality, because we were going to have to start charging you payment. But then if SBA determined it was fully forgiven, they were going to send us the money and then we would have to figure out how much of it we would have to return to each borrower. So this made it a lot easier for everybody to keep up with.
Yeah, Adrian, but I bet the amortization schedules are going to be really fun in your loan documents when you don't know how much it's going to be or when it's going to start.
That is very true. So we are actually in our system putting that there is no due date and no payment amount until we process each forgiveness application individually and determine if there's a balance. Is it a 2-year term? Is it a 5-year term? How many months are remaining? Calculate their payment and then start billing. And again, it's a lot for 15,000 loans, but it's also to the best benefit of the customer. So
yeah.
So we've already discussed a lot about FTEs, and I'm sure the slide's going to trigger some more questions. But I'm going to, and I think Bradley may have covered some of this, but I'm going to go over the same information, and then we can add to the discussion here. So in determining how much forgiveness will be based on how you spent your loan proceeds, you also need to calculate any reductions to wages and salaries, as well as full-time equivalent employees, which is referred to as FTEs, which then results in a quotient that you multiply by the amount you have determined should be forgiven. So if you had no reduction in staff or wages, the quotient is 1. So when you multiply that by your forgiven amount, there's no impact. If you did have a reduction, the calculator SBA has provided will determine what the quotient is, which is an amount less than 1. It's a decimal. And when you multiply that by your forgiveness amount, it will reduce the amount that can be forgiven. So that's how the FTEs impact your forgiveness amount. You cannot be dinged twice for reducing FTEs and reducing salaries. It's one or the other. And another important thing to note is that SBA has allowed for several exceptions. We've already talked about a couple. So that issues like an employee refusing to come back to work doesn't impact your loan forgiveness. So make sure that you've read the most current guidance to see if any of these exceptions apply to your situation.
Yeah, this is probably the most complex area of the application and what is most confusing right now. And it really, it's situational. It is situation by situation, and it's not a one-size-fits-all approach. It's really a one-size-fits-one, and is very specific to your individual situation. So Schedule C, we've had a lot of small business borrowers out there who are self-employed. So are there differences? Yes, and this is where it really gets fun. So yes, you're treated differently. So for forgiveness, what is covered is your payroll cost and the covered benefits for employees. And then what they're calling is owner compensation replacement. And this all keys off your 2019 Schedule C, line 31, which is net profit. That was the same schedule, same line, same number that you used when you applied for the loan. So it's very interesting that they're using the exact same document to determine your forgiveness that they use to determine your maximum loan amount. So if you're at the 8 weeks, then you use a 8/50 seconds factor. If you're at a 24-week covered period, then you use a 2.5 divided by 12 factor applied to that line 31. Again, that should match your loan amount if you have no employees. That would be basically that they're saying that all of your loan can be forgiven with your estimated payroll cost. Now, those are the maximums. If you were less than that on your line 31, then obviously you would not get, for example, 20,000 over the 24 weeks, because your loan amount would not have been more than that. So you're still limited by your loan amount. So if it was less than the 20,833, they're not going to obviously forgive 20,833. The non-payroll cost or mortgage interest, rent, lease, and utilities that have been or could have been included on your Schedule C. So you can't put them, you can't start with utilities now. And this goes back to the same concept of all the other businesses have to show that those were obligated or engaged on 2/15. If you have them on your 2019 Schedule C, then you will be eligible. But what are the differences? So benefits for the independent contractors, sole proprietors, and general partners are not forgivable. And so that's one of the big differences. The SBA and their interim final rules talk about why they consider this, that's part of the overall compensation that's already been included in the compensation for owners. So there's a lot of justification for that. And then also interest on other debt obligations. So where a corporate business can include other interest besides just a straight mortgage interest, Schedule C borrowers cannot. So those are a couple of big differences you need to be aware of if in fact you are a sole proprietor and filing Schedule C.
Hey, Bradley.
Mm-hmm.
When you say that, can you also include whether people have an outside office space versus those who work from their home as part of their business?
Yeah, absolutely. You don't have to be a home-based business to be a Schedule C.
But I mean, that would be their personal mortgage, not a lease of some sort of commercial property.
No, their personal mortgage cannot be deducted. The interest on their personal mortgage cannot be deducted except for the portion that was allocated to their Schedule C. So you can use a square footage allocation, or you can use a safe harbor allocation on your Schedule C. So if you have done that and it's on your Schedule C, then from 2019, then it can be eligible. If it's not on your Schedule C, it's not going to be eligible. And obviously you can't deduct the full amount. If you do have an outside facility and that is strictly for business, then that full amount is deductible, or forgivable, I should say, forgivable, because it was deducted.
Right. So how do you apply? So this is going to be a little different by bank. Some banks may be taking paper applications. Some may have online. Obviously, they're going to be sending instructions to you on how specifically they want to apply. But once they do, and they let you know that you're going to be submitting an application, whether that's paper or online. You're going to have a list of required documentation that is actually in the application. So you can look at SBA's application to see what documentation you have to submit. They are also asking you to collect application or documentation and not submit it, but make sure that you keep it in a file. I think, Bradley, it was for 6 years. And then the bank is going to review your application and perform required verification of certain things like calculations that they're having us take a look at and make sure it all matches up. What we are doing with our customers is that if they apply for something and we do the verification and determine that it's different, we're reaching out to the customer to try to resolve that first. You know, maybe they didn't send us the right document, maybe they just calculated something wrong. You know, we want to get on the same page if possible. But if we make a decision on a loan and it ends up being different than what our customers have calculated, then they, and this is for all customers, that all PPP customers have the ability to, once they get that determination, to ask SBA to review the application. They have to do that within 30 days of being notified that there is going to be a portion not forgiven or all not forgiven. But some people may apply knowing that, right? They may know when they do their calculations that a part of it's not going to be forgiven. So it's only if you disagree with the results that the bank gives you that you do have an opportunity to ask SBA to be a second reviewer to, you know, and then they'll make the final determination. But it's important to remember you have to do that within 30 days.
Yeah, so once you apply for forgiveness, to understand the bank has 60 days to make the first decision, and then the SBA has 90 days to pay that forgiveness amount off on your loan. So there's going to be some hurry up and wait in this process, but your primary contact is with your bank until y'all, hopefully you don't, but if you do run into a disagreement about forgiveness, then that's when you would contact the SBA.
Yep. So there's going to be 3 outcomes from your forgiveness application. Your loan is either going to be completely forgiven and you never have to make a payment. Part of the loan will be forgiven or none of it will. If any part of the loan is not forgiven, you will repay the principal balance plus the accrued interest during the deferment period over the remaining term of the loan. The Forgiveness Flexibility Act changed the loan term to 5 years on new applications that started June 5th and allowed for existing loans prior to June 5th to be modified under certain circumstances. So both the borrower and the bank have to agree to modify those loan terms. And so that's, if that's something that applies to you and you're interested in modifying that, then I would reach out to your bank and find out what that process is going to be. Anything to add here, Bradley?
Yeah, just a couple of observations and reminders is that if you do have a percentage that is unforgiven, a dollar amount that is unforgiven, and you don't want the loan, you can repay that without a prepayment penalty. So at the time that your forgiveness amount is determined and is paid off by the SBA, again, you can return the unforgiven portion without prepayment penalty. An observation here, if you're one of the pre-June 5th borrowers and you have a 2-year loan term and you want to go to a 5-year loan term, I would tell you just don't get your hopes up, because most banks are not going to want to have their capital tied up at 1% over 5 years when they don't have to. So while the SBA or while the PPPFA allows the bank to extend it out, don't think that's a requirement. Don't think it's automatic. The bank also has to balance its balance sheet, has to manage that. So they're going to be definitely looking at their capital requirements and looking at how that's going to affect them before they make those decisions.
So this last slide is just our disclaimer that, you know, we're not providing specific legal or accounting advice, and, you know, trying to provide guidance and answer questions. And I know we're going to go to some FAQs next, or some Q&A next, but it's just important to, if you have a specific situation, to be working with an accountant or an attorney during this time to make sure that you're getting guidance that's specific to you and your needs.
Very good. So I think our first question is employer paid Social Security, Medicare, and unemployment tax considered a payroll expense under loan forgiveness?
Adrian, I think you addressed that in the, one of your slides where you talked about what the payroll costs were. And employer taxes, the only employer tax that can be considered is SUTA.
Okay. Let's see. Can you please speak to the FTE safe harbor provision?
Okay, so there's two different ones depending on if it's an 8 or a 24-week period. The 8-week period is still June 30th. The 24-week period is 12/31. That is your safe harbor number or date. I'm sorry, your safe harbor date. So if you have a headcount reduction, you have to have it restored by either one of those dates, depending on what your covered period is, which means that you can go the whole 8-week period with a reduced headcount, and let's say your period ends today, and you have reduced headcount, and you have a headcount reduction penalty. You can wait to file for forgiveness until June 30th after you have restored your headcount to the reference period number. So that is what the safe harbor does. It picks a date and time, and it looks at your headcount as of that date. That you like I said, you would compare that to a reference period.
Okay. This is kind of a long question. It might, can you guys see this question? It might be better for you just to read it.
When I do the math, yeah, that's absolutely correct. And I think Adrian showed that as 20,833. If that is the maximum loan amount, then that is the maximum amount of forgiveness you're going to get. However, if you take $100,000 and you divide that by 52 and multiply that by 24, you come to 46,154. So that is the max amount for any one individual. So not everybody is in the same situation you're in. Some people will be able to go over 24 weeks and pay someone out $46,000. May not work in your situation. You may be capped at the 20,833, which is, I think, what Adrian presented right here.
Okay. Then we have a clarification request. Can sole proprietors deduct lease and/or payments on vehicles and equipment up to the 40% or not at all?
So if we go back to that Schedule C slide, right here, the third bullet point there, mortgage interest, rent, lease, and utilities. And as we pointed out, mortgage interest, rent, and lease are on real and personal property. Now that means that it has to have been included on your Schedule C previously for you to deduct it. So there's again, devil in the details. So it's not an automatic, but it's not automatically out. It depends on your individual situation.
Okay. How long do you have to keep your head count up to maintain forgiveness? If I do the 8 weeks and when my PPP runs out and we don't have the business to keep a full staff, can I let people go? I feel like initially they said we had to keep people on staff through the end of July.
I don't recall seeing anything about keeping staff on through July. Once your forgiveness is submitted and once your covered period is done, so if you're on an 8-week covered period, once that covered period is done, you're done with PPP and the rules and regulations around it. I've not seen anything in guidance or in the act that talks about subsequent events.
Okay.
Obviously, if you're on a 24-week period, then you'd have to keep the head count longer because you're looking at an average over that period and comparing it to the average over your reference period. And again, that's where you get into a lot of details. There's 2 different reference periods. You have to compare those reference periods to each other, select the one that has the lower average head count, and how do you calculate head count? That's on the application. There's 2 different methods. There's the direct method and the simplified method. And this is where it starts getting very complex. And like I said, it's very situational. And it's not something that can just easily be generalized.
Got it. Anyone else have questions? Will First Horizon be providing electronic forms for the forgiveness application?
We have an online process, so we're in the middle of working with a vendor now, but we've invested in technology to hopefully make it super easy for the borrower to fill in all of the fields and the calculations, and they'll be able to upload their documentation through that as well. So it will all be online.
Okay. I think this is kind of asking similar questions. What are the guidelines for someone to use the newly released Easy Loan Forgiveness application?
You know, it just came out yesterday, so I'm not as familiar with it as I am with some of the guidance that I've reviewed several times. But let me see if I've got some highlights here. So the easy applications for borrowers who are self-employed and have no employees, or did not reduce the salaries or wages of their employees by more than 25%, and did not reduce the number of hours of their employees. Or they experienced reductions of business activity as a result of health directives related to governmental orders, and did not reduce the salaries or wages of their employees. So if you're self-employed with no employees, you can use it easy. If you basically did not reduce salaries and wages or hours of your employees, then you can look at the easy application.
Great. Okay, I think we have time for one more question. When I applied, I had to use my 2018 Schedule C because we had not filed the taxes yet. Will that be the number I'm using, or will it update to my 2019 numbers?
I don't know who you bank with, but they let you use an application, a document to support an application that they were told not to. They were specifically told they had to use your 2019, and if you did not have it completed, you should use a draft of your 2019 Schedule C. So I don't know why the bank didn't adhere to the rules, but the rules say for forgiveness, you have to use your 2019 Schedule C, line 31.
So I guess, is there anything this person needs to do at this point about that?
Nothing they can do at this point except talk to their bank, and the forgiveness decision is up to the bank. So this is one I would talk to my banker, but I would. This situation makes me nervous because that's not a documentation that was eligible to be used to get a loan.
Gotcha. Okay. That looks like we don't have any other questions. I know we are also grateful. I mean, this is pretty confusing stuff. So any insight y'all can provide is just extremely helpful. And we have recorded the call, so we'll put it up on the United site. One person did ask if they could have your slides. I don't know if you're comfortable with that or if you want them to just watch the video. But if you do want to send me the slides, feel free. Otherwise, we'll just post the video and go from there. Thank you all so much. So grateful.
Thank you.
Thank you.
Thank you for having
Buddy.
us.
Thank you.